Hi everybody, and welcome to another EPCOR Deep Dive. I'm Brandie Thacker, President and CEO of EPCOR, and today I've got a hot topic for you that's making some waves, and that's the Genius Act. Just signed into law a couple of weeks ago, on July 18th, this landmark legislation is a game changer, bringing long-awaited regulatory oversight to a category of digital assets, and that's stablecoins. Let's dive into this new legislation's impact on traditional financial institutions. At its core, the Genius Act provides a much-needed regulatory framework for payment stablecoins. But what are those? They are digital assets designed for payments that are pegged to a stable value, like the US dollar. For years, stablecoins operated in a very regulatory gray area, but the Genius Act brings clarity and seeks to foster responsible innovation. It establishes that only permitted payment stablecoin issuers, or PPSIs, can issue stablecoins here in the US. And this can include subsidiaries of insured depository institutions, and we're talking banks and credit unions here, or federally licensed non-bank entities. Crucially, the Act also clarifies that these Genius-compliant stablecoins are not considered securities or commodities, placing them primarily under the oversight of banking regulators. This is a significant shift in oversight. The Act clearly defines specific requirements for these issuers as well. For example, every payment stablecoin must be backed one-for-one by high-quality liquid assets, like the US dollar or short-term treasury bills. Transparency is paramount with this legislation, which calls for monthly public disclosures of reserve composition and clear redemption policies. And here's a big win for consumers and just for overall financial stability. The Act provides robust consumer protections, which prohibits against misleading marketing, repledging of customer stablecoins, and in the event of an issuer's insolvency, stablecoin holders now have priority claims against those reserves. Stablecoin issuers are also explicitly deemed financial institutions under the Bank Secrecy Act, meaning strict AML and sanctions compliance programs are non-negotiable here. Now, for the critical question, what does this mean for traditional financial institutions? The Genius Act ushers in a new era of both opportunity and certainly competition. On the opportunity side, this could empower banks and credit unions to confidently explore new revenue streams in stablecoin custody, tokenization of assets, and maybe even developing new payment rails. Imagine faster, more efficient cross-border payments or highly programmable financial transactions. This could represent a significant upgrade to existing payment infrastructure. However, there's also the element of competition to take into account too. With federally licensed non-bank entities now able to issue stablecoin, the payment field or playing field is expanding just like everywhere else, it seems. Financial institutions will need to do a few things. First, reevaluate their digital asset strategies. It may be time to consider looking to issue stablecoins either through a subsidiary or partnering with an existing issuer. 2, strengthening compliance. Your existing AML and risk management programs will need to adapt to this new asset class, including leveraging real-time blockchain intelligence. 3, invest in innovation. The rapid evolution of payment technology means staying competitive requires continuous investment in modern infrastructure and services. It's important to note the effective date of the Genius Act. Its provisions take effect on the earlier of January 18, 2027, or 120 days after the primary federal stablecoin regulators issue their final implementing regulations. This gives financial institutions a window to prepare, but being proactive is key to given the complexity of these changes and the anticipated rulemaking. Lastly, I'd be remiss not to mention that this is just the beginning of what is likely to be a new era for the payments industry. The Genius Act is the first significant piece of digital asset legislation to be signed into law at the federal level, making a dramatic shift towards a more proactive legislative approach to digital assets and laying the groundwork for future regulation. The Genius Act is not just about stablecoins, it's about the future of payments and a call to action for traditional financial institutions to really lean into innovation, assess readiness, and leverage their foundational strength and trust and compliance to navigate this evolving landscape. Stay tuned to EPCOR for more insights as regulatory efforts surrounding digital assets continue to take shape. I'll see you next time. Take care.